Nvidia just pulled off a financial stunt, adding a whopping $600 billion to its market cap in the past 2 months. To put it in perspective, that's like gaining another whole Tesla in terms of market value. In the Magnificent Seven lineup that's been propelling the S&P 500, Nvidia is stealing the show. It's the star player, boasting a remarkable performance with over a 40% increase year-to-date. Following in the performance league are Meta, scoring over 30%, Amazon with a 15% climb, and Microsoft showing a 12% rise. Alphabet has made a decent 6% gain in 2024 so far, while Apple is down by 2%, and Tesla is experiencing a 22% dip. Now, Nvidia's market cap has hit a whopping $1.7 trillion, equaling the entire China stock market. It's like the US is setting records, constituting 64% of MSCI ACWI, while China is now less than 3%. In a playful afterthought following the Super Bowl, Michael Hartnett, the BofA strategist, highlighted the colossal change in ad prices. A 30-second ad during Super Bowl in 1967 cost $37,500, and now, for Super Bowl, it's a staggering $7 million, making it a 185 times jump. He humorously muses that if everyday items could keep pace with Super Bowl inflation, we'd be shelling out $43 for a pound of chicken wing from the 23 cents in 1967, $340 for a six-pack of beer, $61 for a gallon of gasoline, and the average U.S. house price would be a hefty $4.2 million. To cap it off, the S&P 500 would be at a jaw-dropping 16,374. Talk about inflation, right? Nvidia is gearing up for its fiscal 2024 Q4 earnings report, scheduled for February 22nd, post-market hours. The buzz in the market is around the anticipated EPS estimate of $4.53, signaling a whopping 415% surge from the same period last year. The revenue forecast is equally eye-popping, aiming for $20.3 billion, marking a staggering 237% leap from Q4 fiscal 2023. To make sense of these numbers, let's rewind a bit.
NVIDIA accelerated computing starts with DGX, the world's AI supercomputer, the engine behind the large language model breakthrough.
Nvidia made a splash with its H100 AI GPU rollout at the beginning of the previous year, gaining significant traction into the subsequent Q1. This creates a low base for comparison this quarter, making any sequential growth look even more impressive. Just to put it in perspective, the company raked in $18.1 billion in sales in the recent Q3, clocking $4.02 in EPS. What's got the market on the edge of its seat is the hope for continued robust growth and, ideally, a substantial beat on the top line. This would serve as a solid indicator of the sustained demand for the AI opportunity, which has been a major narrative for Nvidia. It's not just about the actual AI hardware consolidated within the data center segment. Nvidia's CUDA software platform, used by developers for commercial AI applications, has been a game-changer, contributing to improved margins. As for the other segments like gaming, visualization, and automotive applications, the expectation is a steady uptick, thanks to routine product updates and replacements. Now, about that $20 billion sales forecast, the management hinted at this target back in Q3. It seems reasonable to expect Nvidia to hit around that mark, given the only constraints would be the physical manufacturing capacity and the logistical hurdles in delivering that supply. Sure, there are some lingering questions about sales to China amid the trade embargoes last year, but the assumption is that the demand is robust enough to reroute orders to other international customers. The intriguing part? Nvidia beating revenue expectations for 4 years straight, even navigating through the turbulence of the pandemic era. So, betting against a significant sales miss might be a tough call. The table below paints a clear picture of Nvidia consistently outperforming consensus revenue estimates. Nvidia has been on a winning streak when it comes to beating EPS estimates, with just a couple of small hiccups in 2022 when shares took a dip to as low as $108. As we gear up for the upcoming report, all eyes are on the financials, especially the gross margin, which shot up to 75% in Q3, a significant leap from 71.2% in Q2 and even more so from the 56.1% mark last year. This uptick not only underscores Nvidia's pricing power, each AI GPU sells for over $30,000, but also highlights the strength of its broader developer toolkit. Given these recent trends and the momentum they've created, there's little reason to expect a departure from the norm this quarter. Another headline beat seems very much on the cards. Looking ahead for Nvidia, it's important to acknowledge the strong foundation and favorable winds at its back. The market has been bullish for months, riding high on the consensus that the AI wave is real and here to stay. But let's not get ahead of ourselves. Assuming Nvidia will smash the numbers and trigger Nvidia Moment 2.0 might be overly optimistic. We're not betting on that scenario. Our take is that the market has already factored in this wave of growth, making it challenging to exceed expectations by a wide margin. Instead, we anticipate a sell the news scenario after the Q4 report, where the market recalibrates and starts looking ahead to Nvidia's AI prospects in 2025 and beyond. Looking further down the road, Nvidia's pipeline of AI GPU sales will evolve beyond the initial rush from high-profile customers. Data from Omdia Research indicates that major players like Microsoft, Alphabet, and even Tesla were significant buyers in 2023. Reports suggest that Meta Platforms alone plans to shell out upwards of $9 billion on Nvidia chips this year. The big question is whether Nvidia has already snagged the easy wins and what the demand landscape will look like as the AI opportunity matures over the next few years. There are a couple of interesting trends catching our eye, particularly in the realm of AI software. There's a noticeable shift towards maximizing efficiency and doing more with less. Companies are realizing that the price of chips is no joke, so they're exploring new ways to optimize language learning models, aiming for greater computational efficiency. This essentially means that what once required 10 KH100 GPUs in 2023 could soon be achieved with a much smaller infrastructure. Now let's talk about the rising competition and in-house alternatives. Companies like Microsoft are rolling out their own chipsets like the Maya, while Alphabet is entering the game with its Gemini platform. This is not to forget the competition brewing from players like Advanced Micro Devices, AMD, eyeing similar opportunities in high-performance applications computing. However, as we look at Nvidia's current $700 share price, it's clear that the risks have elevated compared to the $500 mark just a couple of months ago. Despite the strong Q4 numbers expected, there's a significant level of uncertainty regarding Nvidia's earnings trajectory beyond the next few quarters, leaving room for potential disappointment. Nvidia Corporation has witnessed a substantial 61.75% surge in its stock price since the last analysis, where it was recommended as a buy. Upon a thorough assessment using two valuation models, the conclusion is that Nvidia is no longer undervalued, although the potential downside is a mere 1.91%. The average from both models indicates a fair value of $690.86, with a projected future price for 2029 at $1,348.76. Diving into the markets, the data center segment, currently Nvidia's primary market, has been a key driver behind the recent stock rally. The data center market is expected to grow at a CAGR of 6.56% through 2028. However, the real powerhouse within this market is the AI segment, where Nvidia sells its H100 and H200 GPUs. Projections foresee a robust CAGR of 17.30% from 2023 to 2030, with an even more impressive CAGR of 27% expected in spending on AI-centric systems from 2022 to 2026. Moving to the gaming sector, Nvidia's GPUs business and the cloud gaming service, GeForce Now, are pivotal. Estimates suggest that GeForce Now generated approximately $1.4 billion in revenue in FY 2023, year 2022. The cloud gaming market is forecasted to surge at a compelling CAGR of 44.09% from 2023 to 2027. Concurrently, the GPU's business is anticipated to experience a robust CAGR of 33.8% through 2029. In the automotive realm, the sale of new energy vehicles is poised for significant growth, projected at a CAGR of 37% until 2025. This, in turn, would propel the sales of automotive semiconductors at a similar CAGR. Lastly, the digital visualization market is expected to show healthy growth, with a CAGR of 10.95% throughout 2029. Nvidia has experienced robust financial growth, with revenue surging at a 60.3% rate since 2018. Notably, operating income has outpaced this growth, soaring at an impressive 90.4% annually. The net income has not lagged behind, showing a remarkable 86.7% annual increase. Turning attention to Nvidia's balance sheet, there's a positive shift. Cash reserves have climbed from $16.02 billion to $18.28 billion. Although there's a slight fluctuation in debt, showing an increase of 14.09%, it doesn't overshadow the overall positive trend. Exploring the trends from 2021 to 2024 TTM, short-term debt has grown by 9.6% annually, long-term debt by 7%, and cash reserves have matched this growth, increasing at a steady 9.7% annually. So what's the deal? According to the numbers, Nvidia seems to be riding a bit high at the moment. The average from the valuation models suggests a fair price of $690.86, signaling a tiny 1.91% near-term downside. On the flip side, there's a possibility of annual returns hitting around 15.19%. Now let's talk about AMD's story in Q4 2023.
At AMD, we're focused on pushing the envelope in high performance and adaptive computing to create solutions to the world's most important challenges. From cloud and enterprise data centers to 5G networks to AI, automotive, healthcare, PCs, and so much more. Today, we're here to talk about our newest EPYC data center processors, our upcoming Instinct accelerators, and our growing AI software ecosystem.
They hit it big, beating earnings and revenue, and confidently declared that 2024 was going to be a powerhouse year for data centers. But here's the twist. Their Q1 2024 forecast fell short of expectations, causing a dip in their stock. Now, does this mean Nvidia is destined for the same roller coaster? Not necessarily. There's a good chance Nvidia could pull a rabbit out of the hat and outshine the Q1 2025 estimates. Looking ahead as we approach the year-end, the stock might see some adjustments. The 5-year models are gearing up for a change, taking FY 2024 and tossing in FY 2031. This tweak will boost the overall cash flows in the model, potentially affecting the fair price. Now, the semiconductor cycle, predicting 10 years of continuous expansion, is a tough nut to crack. If you peek at the revenue estimates table in the first DCF model, you'll notice years where the growth slows down. Then there's the speculative nature of estimates beyond 2026. Less than 10 analyses are backing those predictions, so there's a chance they might get a reality check and face adjustments. In conclusion, the stock has been on a wild ride. Back then, it was a hidden gem, undervalued and underappreciated. But times have changed. In this latest analysis, the numbers hint that Nvidia might be slightly overvalued, projecting a fair price of $684.80 and a future price of $1,341.82. The downside risk is like a mouse nibbling on cheese. almost negligible. And there's still that element of surprise Nvidia might pull off in Q4 2024 earnings.